Well, Ronojoy Datta is not the only one who's wildly bullish. That's pretty much clear. With the fact that Akasa Air has inked a deal for a $9 billion worth purchase of 72 new aircrafts from Boeing. They plan to launch in the summer of 2022. Initial permissions are already in place. Utkarsh Chaturvedi joining us now with more details on the deal.
So this was a deal which was more or less waiting to happen. We had told our viewers, I think, almost 20 to 25 days back that this is the final stages of the talks, and it can be any time that the deal can be announced, and that is how it is. Deal gets announced. In fact, both the parties had made up their mind. They were just waiting for the Dubai Air Show to sign the same. They're talking about 72 737 MAX aircraft, and if you look at it from the point of view of Boeing as well, it's a re-entry of Boeing. It was long back that any order was really being signed because it was SpiceJet only which was using 737 MAXs. Jet Airways, the erstwhile one, had signed a deal, but they hadn't really started flying any of those. But the new Jet Airways is also in talks with 737 MAX with Akasa. What will happen is that the 737 MAX will be coming in two phases. We have been told that the first phase will be of around 20 aircraft in the beginning, where Akasa will really look to launch it airline with, and then the delivery schedule will keep coming. Now, if you look at the 72 aircraft, that means that Akasa means business. Akasa wants to really go for the long run in one go, and that is how good deals are done. It is a huge deal. It's a long deal. It's a long-term deal with the view of Akasa. Why 737 MAX? Also because when the negotiations had started, also during Corona period, Akasa believed that Boeing can give them a better deal, and that's what has happened. That is why a deal with 737 MAX is very crucial for Akasa, for Jet Airways, for Boeing, and this is just the beginning. In fact, the deal took a bit longer given the fact that Akasa didn't get NOC on time. Once the NOC would have been done, the next step for Akasa after securing the deal will be for the airport operating permit once they have the aircraft details with them.
All right, Ajay Awtaney and Jitendra Bhargava with us on the show this evening. Ajay, let's start by your take on the fact that they've started with 72 aircrafts. It was, as Utkarsh said, fairly widely known that they would be going in for around this number of new aircrafts. What does the strategy seem to be? Like I said in my opening comments, Akasa will be coming into a very competitive market. And is this really the right time?
Hi, Tamanna. Hello from Dubai. Actually, I was in the vicinity when the deal was happening, I guess. Now, a couple of things about this deal. First and foremost, this deal makes strategic sense both for Akasa as well as for Boeing. Like, in the narrow body segment in India, the lion's share of the market is with Airbus, with Indigo, Go Air, and all the other carriers. Only SpiceJet and Air India Express are customers of Boeing. So it was very important for Boeing as a deal to crack a deal in the narrow body segment in India. For Akasa, this deal could have not, this deal and the timing of starting a new airline could have not come at a better time. That's purely because of the fact that, all the factors line up for them. Because the 737 MAX is trying to return to service in this part of the world, they might have gotten a sweet deal. So $9 billion is the list price of the deal. But, as is prevalent in the aviation sector, these deals, they might have gotten a deep discount on that. Obviously, we'll never find out what the exact discount is. Having said that, there is also a glut of other resources that an airline needs for a quick start. One of them is obviously pilots, captains, cabin crew. So ever since Jet Airways went under, a lot of these people have been around waiting for an opportunity to fly the MAX again. So had they gone for the Airbus family aircraft, they had to literally poach it from other airlines. But here, there's a ready-made pool from Jet Airways, from SpiceJet, from Air India Express, that they can actually bring in pretty quickly. So the timing is actually perfect for them. On the revenue side, this is a market that competes on ticket prices. So one of the best things that, one of the new thinking aspects I would say for Vinay Dubey's airline, is that they've ordered very dense aircraft. So the aircraft order is split between the 170, 178 seaters, and it's also got a lot of the 200-seater 737 MAX. So I guess the initial aircraft that will start coming in next year onwards should be the non-dense ones, but as Boeing starts putting them through the motions, the 200 seaters will come. So obviously more seats on the same aircraft mean that the operations cost per passenger on the flight become lower and easier to hopefully break even on a per passenger basis on the flight. So all these things, I think Vinay Dubey said he wanted to launch ultra low cost carrier. And today is the first insight we see in his strategy, because I think the 737 MAX 200 is the perfect aircraft, for that kind of an operation. I say Ryanair is the only other carrier in the world using them at this point in time, and we all know Ryanair. Everyone talks about them in a good way or bad way. Yeah.
Yeah. Great insights there. Great insights there from Ajay Awtaney, who is at Dubai right now, Jitendra Bhargava, your view on what we are learning about the shape and form of what Akasa Air is going to be like from this first big clue coming in from the kind of aircrafts they're purchasing and the kind of aviation space they're going to come into while we are seeing revenge travel and an improvement in travel. Pictures and videos of airports packed to the gills right now. But broader concerns still remain, isn't it, for the industry? High ATF rates, which are pinching relatively regulated airfares and also highly competitive airfares. And on the other hand, we don't know if work for travel is going to come back to the same pace as before.
Anna, the toughness of the Indian market will be a challenge for any airline, whether you position it as an ultra low-cost airline or a legacy carriers. And coming at a time, one can argue whether it's the right time or the wrong time, because having placed the order, they're going to get deliveries in a calibrated manner, launch flight sometime in the summer of 2022. Now, by that time, the Indian domestic market would have fully come back to the original pre-COVID level and be on a growth trajectory. Now you have the pilots and the planes already available with Indigo, SpiceJet, other carriers available. So they would have launched their 100% capacity, 100% market would have got back to normalcy, etc. So that's there. There's no denying the fact the price sensitivity plays a part. So how low can the cost be of Akasa will be a determining factor. Let's not overlook one key factor. Whenever a carrier has started operations on Indian flight, they've been either a first-time venture for them, lacking in experience. It's a rare thing that you're finding that you have Vinay Dubey with an experience background that is launching a flight. You see, if you look up even Indigo, they were into the global distribution system, but not directly connected, of course. Their partner had all that experience of United States. Now here, when we look at it here, the experience will matter. The financial, Rakesh Jhunjunwala, he probably put in a certain estimate of funding it to such an extent. But will that funding survive those 2-3 initial years when the airline is bound to be losing heavily? Now, it's a question of how fast you develop cold feet and say, look, I've put in a lot of money and I'm not. There is a certain gestation period. You need to see it through. And 72 aircraft basically means that they are talking of a 3.5-4 year period in which they will induct these aircraft. Spread the network, get the passengers on board. And the beauty of Indian aviation is that whoever offers the lowest fare gets the passengers. So if they can really maintain their cost low, though in my opinion, there is nothing like ultra low cost. Airport charges are the same. The remuneration that you pay to the pilots will be the same. The fuel prices you pay are the same. The airport charges that you're paying are the pay, etc., etc. Everything comes out. So there's very little, unlike in Europe and United States, where low cost carriers have a secondary airport in which they can land, and therefore the costs are low. Here, we are not going to be witnessing anything of this kind, but where they're going to save, and if they can really be on a low-cost thing, and I heard the Indigo chief executive say a few days ago that their model is also based on the lowest cost factor. So where will the advantage come? So you have a new carrier getting into the Indian skies, and second, Indigo with a dominant market share of 55% plus. So it's not going to be easy, but we must welcome the new airline, because more the merrier, as they say. And if they can really make it profitable, it'll be a wonderful thing, because passengers have a choice. Let's not forget the number of carriers which have bitten the dust, etc., and not survived very long. But low cost is the space to be in.
No, absolutely. We say this often. The Indian aviation sector is the graveyard for airlines. Let me just take that quickly to Ajay. In terms of what will be the offering that will set apart an Akasa. An ultra low cost carrier is what they say they want to be, but then everyone is in that game, right? Pretty much everyone is in that game. The Indian market is one of lowest cost wins or lowest ticket price wins. So how really do you think they can set themselves apart?
Well, Tamanna, you talked to Rono today, so he must have told you that, they're already at the lowest cost of operation as an airline. So obviously you can't beat Indigo's CPM. The thing is, what the Indian rule book needs is a change of rules. You can't reduce the cost any further, I would imagine, as compared to what Indigo offers at this point of time. What you can do is try and get more money out of the passenger's pocket. This is something that the first clue we have is that they will, for instance, on the same plane that other airlines fly with 170, 178 passengers, there's a denser version. So they can fly 200 passengers on the same plane. So that means they can sell approximately 20 more tickets on a day-to-day basis. That could be the difference between losing money per flight versus making money on that flight. That's number one. Some of the other things that AirAsia tried when they launched and did not get away with was not offering baggage, as in baggage had to be chargeable, no water and everything. We need to see if Akasa is now going to be able to convince DGCA to change their thinking or permit them to, charge for all these separate things. Currently, the rules are very, very firm, but I think airlines need to be given the option to, times are tough, and I firmly believe that a guy who carries just a backpack on the plane should not be paying the same amount of money as the guy who checks in a bag with 15 or 30 or whatever kgs. So the second differentiating thing, which might be, now that we have the first clue of how Vinay and RJ and Aditya Ghosh and they're all thinking, is maybe they're not even going to go on the metro to metro segments. There's a huge market. I'm here at the Dubai Air Show right now, and obviously everyone talks about the tier 2 and tier 3 markets of India. I was, what if the launch is more planned around, going, let's say, from a Nagpur to Goa or a Madurai to Andaman and so on and so forth. Maybe they will obviously have some presence on the Bombay-Delhis and the Bombay-Bangalore routes and so on and so forth, the metro connections and the trunk routes, as we call. But the willingness of people to pay for travel is much more in the tier 2 and tier 3 cities. Ask me, because my in-laws live in a tier 2 city, and boy, the amount of money I pay every time, because there's only one or two flights out of there every day, is crazy amount of money we pay for that. So those are the routes where an airline can actually make money. The Delhi-Bombay routes are saturated, the trunk routes are saturated, but tier 2 and tier 3 are wide open right now. So that's the place to go to.
Okay, so it's going to be interesting. It's going to be interesting if Akasa hits these routes, and Ajay, hopefully lighter on your pocket as you have mentioned. It's a story that is unfolding. We're tracking it right here on ET Now. But for today, the first hint, the first insight into what this new airline, the new kid on the block, backed by Rakesh Jhunjunwala, the big bull, is going to look like. Thanks so much to both of you for joining us.